I think we are live. Welcome, everyone. This is our third episode of our Crypto Innovator Series. We are having a 10-part series where we're bringing on the best and brightest in crypto to walk us through who they are, their backgrounds, what they're doing in crypto, what our audience and consumers should be looking for when they're looking at their own investments, and just have a chat with some amazing people. So we're very excited to have the team from Fourth Revolution Capital on. Keegan and EJ, pleasure. Thanks for coming on.
Thanks for having us.
Yeah, man, excited to be here.
Sweet. Well, appreciate you guys coming on. For those who may not be aware, maybe we can go through a little bit of an intro into who you guys are, how you got started in crypto, maybe your backgrounds a little bit, and then how Fourth Revolution came together.
Sure. EJ, you want to take it away?
Yeah, sure. Thanks, Dan and the ZenLedger team for having us on. So I'm EJ Rogers, Keegan Selby here with me, co-founders of Fourth Revolution Capital. We are a DeFi and Web3 focused VC firm. We launched last summer in August, but two of us have been involved in the space kind of as angels and DeFi participants and investors for quite a while longer than that. Our backgrounds, kind of in summary, we met at USC. Keegan studied engineering and entrepreneurship. I studied finance and business economics. We both went on after college to work at the same large $100 billion asset manager in the mortgage credit and residential real estate space. So this company operated verticals through every facet of the residential real estate and financial component of this transaction. So brokerage, lending, title and escrow, property preservation, asset management, all kind of run through a hedge fund based in Greenwich, Connecticut. So that's where we got our first experience to the asset management and hedge fund space. While we were there, we ended up in the fintech arm that was aiming to modernize and unify the consumer-facing brands that the company operated. So we got a little taste of fintech kind of at the same time as Ethereum was coming online, and we were becoming progressively more interested in all things DeFi, and kind of at that time, all of the myriad of use cases that were being floated for smart contracts, even extending into kind of the secondary markets of the mortgage space, which we knew well in our past life. So fast forward kind of through to DeFi summer, we had been early investors and community participants in what are today many of the DeFi blue chips, which kind of gave us the financial flexibility to leave that last job and launch 4RC. And as I said before, we're a venture firm focused on partnering with the top founders and teams, trying to kind of build the Web3 future. And we also operate a liquid portfolio to do things like yield farm, throw our weight around in governance to help our venture investments kind of get prioritization on the existing incumbent DeFi blue chips. So yeah, that's 4RC in a nutshell.
Well, I appreciate that. I think it's it's helpful to have some context of backgrounds, what you guys are doing now, and kind of how that came together. I guess quick question on like the fund name. Where did that come from? Fourth Revolution Capital, was that a strategic name that you guys have been thinking out for a while? Was that something that just came to your minds, or is there a significance or meaning behind the 4RC name?
Yeah, great question. There sure is. So we consider blockchain and the suite of products and that it enables alongside AI and machine learning and some of the kind of the new age technological revolutions to be the fourth industrial revolution. So the first industrial revolution being kind of the steam engine that transformed society from agricultural based villages to factory based cities. Then you had the second industrial revolution, which was really electricity and combustion engine. Again, just expanded the scale of markets. The third revolution being the computer, the rise of the internet, allowing for essentially the democratization of information and the emergence of digital business models like Amazon and the likes. And now here we are at the intersection of decentralized finance, of Web3, of the metaverse, and all of the kind of products and, more importantly, from our perspective, investment opportunities that they enable. So that's the name and logic behind Fourth Revolution Capital.
Nice. I always love to, whether it's a company or a fund, like try to see, where the name came from and there's meaning or symbolism behind that. I guess diving into the fund a little bit more, as far as like the team, like what does that structure look like? Is it just you and EJ? Have you guys been, hiring new people recently? I know DeFi Dad has jumped on board and is running up some portfolio processes for you guys. So maybe we can, spend a minute or two just going into, what the team looks like today and if you have plans for expanding that team or getting into other areas of the investment ecosystem.
Yeah, the team started as just the two of us when we launched. But since then, we've made a few big time hires and brought a lot of value on board, starting with Emilio Maglione-Folco, who is someone that we worked with in our last job, who was kind of in the trenches of getting involved in the early days of Ethereum and DeFi with us, kind of on the side. And he came on board a few months after we launched the fund. He's kind of our resident quant and does a lot of great work for our portfolio companies around token economic design, which is something that we really pride ourselves in as a fund and a value add partner, being able to assist our early stage companies that plan to launch a token and how they want to distribute that token and all the different kind of math around emission of the tokens and the supply in the open market to avoid a dump scenario basically and have strong price growth kind of from launch through scale. And then more recently, we brought on, as you mentioned, Travis or DeFi Dad, who his reputation kind of speaks for itself, but has really shored up our ability to support beyond go-to-market, kind of the ongoing community engagement, user education, really just spreading the message of what a project does and why it's useful to any given kind of user. And then putting out all kinds of independent educational material on those use cases, or more indirectly kind of helping the marketing groups from those teams refine their Medium posts, getting placements in publications like the Defiant. So our core team is the four of us at this point. We have a handful of advisors and technical development shops that we work with kind of on a pro rata or contract basis. We're also hiring right now for a number of roles, kind of around analyst and back office support. So we plan to grow the team quite a bit through the rest of this year and heading into 2022.
Nice. With those analysts and back office, is that, what are you specifically looking for? We have an audience of a lot of people who are either customers or potential customers that are, getting their hands dirty with DeFi, with NFTs, with, anything that's on-chain activity. Are you looking for like specific skill sets in general for those roles?
Yeah, thanks for the opportunity to plug us here. So we're hiring analysts, interns, kind of depending on that person's background and qualification. Primarily, the three functions that we're looking to support through that role are one, deal sourcing, so discovering, analyzing, engaging brand new projects, products, primitives, et cetera, they're building in DeFi and Web3 and Metaverse. So that is, we're a VC, so that's first and foremost, deal flow is king. So bringing a new analyst to keep a finger on the pulse, anything from, hey, there's a new NFT drop that we need to look into and potentially mint a few of these NFTs, to something as massive as like a tokamak, like a recent venture portfolio that we did, discovering those deals and getting in touch with the team and providing proposals and analytics to support those suggestions. Number two is again, portfolio company support. So we're an extremely hands-on strategic partner VC. So we do everything from tokenomic design, like EJ mentioned, to marketing through Travis's channels, DeFi Dad, UI UX feedback, product content marketing, community engagement and expansion. So all the core things that founders are looking for is what we attempt to be a partner alongside that core team as an extension of them. And that analyst would be kind of direct point of contact for a lot of our portfolio companies to service those functions. The third one being really analytics specifically. So on all the positions that we have, once they become liquid, if it's a venture position or if we're buying tokens on the open market, we seek to maximize that return with yield generation. So this is anything from staking, lending, liquidity provision on a sushi swap, rehypothecating those positions by staking the LP token, potentially borrowing against it, and leveraging those assets for additional yield. There's all sorts of fun and kind of multi-layered deal strategies that we employ here at the fund, and the additional reporting and analytics around new opportunities and rebalancing existing positions is is much needed here. So that's kind of the three functions of the role: is deal flow, portfolio support, and reporting analytics.
Yeah, I appreciate you guys going through that. I think it's always interesting to see how funds are building that internal operational team and where they're focusing on. And then, I think a lot of that is determined by, how the fund is set up, what you guys are looking for, and kind of the mandate and thesis. I know you mentioned, some sourcing and some of that new opportunity could be for helping source. So I guess kind of a multi-part question as far as like sourcing right now, does that deal flow largely come through existing portfolio companies? Is that coming through some of the analysts or some of your networks? Is that coming from, Twitter or Discord or other communities? And then part of like that sourcing is, the mandate and this thesis. So once you find like a great opportunity, do you have kind of, we can invest in this, we can't invest in this, we focus on this and not this? Or, as far as like the thesis behind investments, are there, buckets or assets that you guys like to have allocations to within crypto?
Yeah,
go ahead.
I think as far as the sourcing goes, it's really kind of a hybrid of all of the different avenues that you just mentioned. We obviously try to be very active kind of in the general communication of the space through Twitter and Discord to keep a pulse on everything that's going on in the market, which becomes increasingly challenging in terms of sleep schedules as the market continues to boom and new projects continue to pop up on now even on different chains. But the referral network that we've been able to build up through founders, through other funds that we play nicely with and like to co-invest with, has really been a primary driver of deal flow. I think as we've sort of built a reputation for kind of the hands-on value add, long-term support that we promise upfront and then deliver on, founders are pretty willing to, often unbeknownst to us, kind of sing our praises. And it's more often than not that we get on the first call with a new team where we're just taking a look at their deck for the first time and they say, oh, we heard about you guys and the work that you did for XYZ portfolio company. And, that's exactly what we're looking for. So I think it's really shifted. We still try to be very active in seeking it out, but deal flow has come to us quite a bit lately. And, I'm sure that's the same for all the other funds out there. Matter of fact, I know it's the same for all the funds out there that do add value and kind of follow through on their promises. And I think the other thing there is that we're as far as like what we look for, we do have a mandate, of course, but we definitely pride ourselves in being nimble. When we launched the fund, it was all DeFi all day long. That's what we knew best. That's what the market appetite wanted. That's where the returns were at. And then over time, that's changed a little bit. There's still a lot of ground to be made up in DeFi relative to the TradFi space that kind of the vision is to sort of, I don't know if usurp's the right word, but to kind of emulate.
It's got some theme music going,
Someone just activated our Sonos from another part of the house. Sorry for that, guys.
Watching you on the live stream, just trying to add some flavor.
Oh man. So yeah, but as far as our mandate goes, yeah, we try to remain nimble and keep our eyes open to what's going on in the market. So, more recently what that's looked like is we still see DeFi playing a very central role, but it's manifesting in a little bit of a different way. You're not out there finding the next money market because that already exists. You're not out there finding the next derivatives protocol right now because that kind of already exists, right? So we're seeing DeFi principles being applied to NFTs in the metaverse in very interesting ways. And when you think about kind of what DeFi was in principle, it was this ability to embed value and transfer value, just like we transfer information on the internet. And that's still happening, but it's just taking place kind of in projects that would be categorized as NFT centric or, metaverse based. So, we come from a DeFi background, like I said, but we're always trying to kind of keep our eyes open and stay adaptive to what's going on in the market.
Makes sense. As far as like maybe a breakup of the portfolio, is there like a skew towards liquid or towards venture, or like do you guys think through kind of like a bucket of 20% here, 80% there? Is it kind of like when opportunities come up, we evaluate them, or when you look at like traditional venture equity plays or potential venture equity, but more token-based plays or liquid tokens? Like, how does that distribution kind of shake out?
Yeah. So when we first got started, we were probably allocating 70% to the liquid kind of bucket of DeFi blue chips, building those positions. One as a treasury strategy, two as to gain the ability to influence governance proposals in the favor of our portfolio companies. And three, to generate yield in those positions, since the volatile tokens generally have higher yields than some of the stable coins, et cetera. And since we've updated and iterated, pivoted to almost exclusively investing in venture. So we raised about $2 million last month, and of that, 1.85 is earmarked for 7 different seed deals. We've only done 20 seed deals since the inception of our fund less than a year ago. So 7 in 1 month is a big step up from us in terms of volume. Hence the need for analysts, et cetera, to support those portfolio companies going forward. But yeah, to answer your question, we're very token biased over equity, and we're venture biased over liquid. We see kind of those returns outperforming that of anything on the liquid market tenfold. So we love, aside from the financial kind of return profile, we really like being early stage kind of extensions of the core team of these projects and helping them go to market. So that's the most fun part of our jobs for sure.
Absolutely. And I know we've been kind of high level of, origin, thesis, mandate, things like that. As far as maybe diving in a little bit deeper, I know this is always like a sensitive question because there's always one project or one team that like doesn't make the list. But when you look at like your overall portfolio now, are there any like portfolio companies that that you think are kind of like the next wave or the next frontier, or companies that maybe fit into kind of those buckets of like more traditional venture, more traditional like liquid plays? Are there any like moats that you guys look at as far as, even in liquid plays, like you have kind of different aspects of how you can invest in the ways that, you view that investment. So, are there any like portfolio companies that you want to touch on that either you're excited about, or maybe some of the ones that you may be investing in, or kind of categories of what you're looking at?
Maybe to keep ourselves out of trouble here, we'll spin the question a little bit and we'll go kind of the themes that we see as some of the core emerging themes across the Web3 and DeFi space, and a few of the portfolio companies that fit in nicely that are either new or that we're closing now. So I guess I'll start with brand new use cases for NFTs. Obviously, we have kind of the art collectible use case that's fairly well saturated in terms of just the plethora of projects out there that are building kind of new and cool NFT drops. What we're seeing come to market now is some of the financial use cases and some brand new use cases that we hadn't even considered before meeting these founding teams entirely. So, for example, there's a few protocols that are actually taking vesting contracts. The majority of kind of token native seed deals, those tokens are actually distributed to VCs and angels via a smart contract, via a vesting contract. And so you can take that vesting contract, transfer ownership to an NFT, and then access liquidity or even sell out of that position via a protocol like Solve, working with a money market for NFTs like NFTFi. So brand new kind of financial use cases like that, also using NFTs to represent derivatives, options, et cetera, that are non-fungible is exciting. We just invested in a company called Altered State Machine, which is leveraging NFTs to harness the power of AI and machine learning. So a couple example use cases there. Say you have like your Madden rating, and one player is 95%, another player is like 30% on a specific skill. You can represent that skill and that proficiency via an NFT. You can do the same thing for licensing and monetizing DeFi yield strategies like liquidation bots. So now you've always had the avatar or the skin represented by an NFT, but now you have the actual brain of your avatar represented by the NFT. So that we see that as being a core kind of Lego in the metaverse gaming infrastructure, and something that we're really excited to partner and back Altered State Machine on. EJ, you want to run through a couple as well?
Yeah, a couple others. One that we're really excited about and that I think is kind of instrumental to the evolution of the broader Web3 space is DAO tooling. Ton of excitement right now around DAOs. Like, it's the hot new thing. You see legislation in Wyoming that's granting LLC legal status to DAOs, and everyone sort of feels, in their heart that DAOs are the future of how we're going to organize what we know today as companies by and large, right? But there's a huge gap in between, some of the back office and core, less sexy functions of how you would actually operate a business. So things like HR, payroll, benefits, right? Like you don't have ADP or Gusto for a DAO today. We recently invested in a company called Utopia that is building just that. And they're taking a really unique approach where rather than trying to kind of go out and go dark and build this sort of, black box solution, then coming to market with something crazy, they're actually working with some of the largest, most active DAOs today to figure out what exactly their pain points are and build solutions that are tailored to them specifically. And then, of course, the plan is to expand that solution out and make it more broad and flexible to be able to be, utilized and applied to all of the DAOs across, that you see out there today and that will arise in the future. And similarly, kind of on the metaverse side, we're interested in, play to earn is a hot topic right now. So we have eyes on new games that are coming out with interesting ways for users to interact and earn from the games they play, flipping the model kind of from traditional gaming where, you were paying to play. Now it's get paid to play. So again, that's a great example of embedding DeFi principles and core constructs into kind of a more fun experience. Many of us, native in the space today, or maybe some of the folks on the call might really have a fun time yield farming, but I think for the masses, that probably wouldn't be something that's considered fun. So when you can embed that same very kind of productive and almost addictive mechanism whereby you're actually earning real money for participating in a network, but that network happens to be a game that's actually enjoyable to play, I think you start to see some really interesting use cases come about. And, as we've seen with Axie, for example, onboarding an entirely new set of users who are officially indoctrinated to the crypto world and most likely will become involved kind of more natively in DeFi and NFTs over time.
Yeah, the name drops there, or DeFi land, which is essentially, a farm bill for yield farming. So leveraging again, like liquidity mining, money Legos for gaming. And then Eternal Return is another investment that we just made. It's a brand new game that should have a significant degree of virality, as it's almost like a pink slip. So in the final arena of the game, you can essentially like wager one NFT versus another, and winner takes all. So my CryptoPunk versus yours, winner takes all. So that we see that as a game that will be massively attractive on streaming platforms like Twitch, et cetera, and there should be a large following there. A couple of other kind of some more infrastructure plays for DAOs and metaverses. We did Enter DAO this month, which is a land as a service marketplace. So you can actually using those NFTs that you own, like a Crypto Voxels or Decentraland, to actually rent them out for galleries or advertising space or whatever you like. Similarly, like other monetization rails for NFTs, like Rara is it's a like to earn. So we're finally monetizing likes. So your likes are no longer free, where you can just go and spam anything with. Now you're actually getting some kind of consensus around what people really appreciate in the art space and others, as well as the ability to monetize curation platforms. So your favorite, with kind of just the overload of drops and different content and art, those curators that are similar to like your Spotify playlist makers are going to be paid through these more kind of social media, social platforms around NFTs themselves, like Rara. I think the last kind of another one that we could talk about as a theme is really traditional finance companies moving onto DeFi rails and leveraging the same kind of liquidity mining incentives and others that we're seeing kind of games and metaverses do. One example is Tribal Credit. So they're a small business lender in Latin America, and they've essentially are taking their credit card points infrastructure and moving that all on chain with their own native token. Having a token, enables you lower borrowing rates, higher APYs on the lending side. just better utility across their platform. So we're working with a number of traditional companies like that to repurpose and renovate their business models to incorporate digital assets and decentralized finance.
Nice. Appreciate that overview. I think it's always cool to see what people are investing in, what assets or what themes that they're looking at. Super familiar with Rara and Lawson and the team and some of the other ones. So it's cool to see, how tight knit of a community is still in crypto. It kind of reminds me of a conversation I was having the other day of, how do we onboard the next, million or billion people into crypto? And I think there's always been this like long narrative of the institutions are coming and they're going to onboard everyone. And it's like, we're still kind of waiting for that, but it's like the conversation seems to be switching pretty prevalently into, crypto is going to onboard the next million or billion or trillion, people into crypto, whether it's through gaming or through DAOs or things like that. So it's cool to have that approach. Even that narrative is kind of switched from like DeFi of Compound or Maker, Uniswap is bringing in new people into NFTs, into DAOs, and then the composability of taking tooling and infrastructure from each kind of bucket and then mixing them together to build, whatever's coming next. So it's just such a fascinating place to be at.
Yes. Speaking of new people in the space, EJ, so League DAO is another portfolio company that we just invested in. Talk about making it fun to interact with digital assets. League DAO is essentially, fantasy sports, starting with fantasy football, the hot topic on everyone's minds these days in the first couple of weeks here of the NFL. EJ, who are kind of the big players that were showing up in that Discord early on?
Yeah, I mean, I just remember like Tiki Barber started following me on Twitter at one point during the early stages of that coming together. So there's a bunch of different kind of creatives and NFL players that are involved. That's another project started by Tyler Ward, who was the founder of Barnbridge, as well as Universe XYZ, a good friend of ours and a good partner of ours.
Gigabrain.
Definite Gigabrain. And yeah, the idea there is, fantasy football and generally kind of that sort of fanhood in sports is just such a popular thing. And the idea to, convert that into a blockchain-based model has been there for a long time. And just now, I think with the way that the DAO ecosystem has evolved, NFTs have evolved, DeFi has evolved, we're kind of in the place where that's actually achievable now. So League DAO is the overarching kind of system that will exist, with this fantasy football use case being the first product. The plan there is to branch that out into soccer, basketball, any sort of sport that has a fantasy type component to it, with NFTs kind of representing the likeness of the player. It creates a true ownership economy where you can have a decentralized system that actually runs these games that are near and dear to our hearts, and similar to some of the stuff we were talking about before with the metaverse, just creating a better economic system for the users that play the game well or interact with the system well to do better, and have a more fun experience playing the game. So that's something of a hybrid between, for me personally, being a huge football and fantasy football fan, somewhere between an investment that we're very excited about and a personal passion project as well.
Yeah, I think those are always like the most exciting ones when it kind of mixes like, passion and pleasure in the same one. I'm a big football fan as well. And I think that's, what we talked about earlier of like the convergence between some of these narratives or baskets kind of converging or diverging is, you look at like Socios or Chili's or something like that, which is kind of like, a step function that we had of improvement into, real fandom and action of potentially, diverting resources or having say in clubs, whether they're soccer teams or football teams or things like that, and now having the ability to interact, with players and with people that are truly, passionate about, fantasy football or fantasy basketball or things like that. So that's, that's super cool. I know, one thing that we talked about was like tooling. And I think that's always like a big thing for a lot of our customers and a lot of our potential customers is, it seems like even for someone like us that spends, pretty much every waking hour or minute in crypto, it's like it's still hard to keep up with the traction, the innovation, the pace of change. There's always, is this hype? Is this substance? Is it, is it noise? Is it signal? As far as like tooling, maybe we can walk into some of the things that you guys are looking at. We talked about deal flow and things like that, but just on like a day-to-day basis, are there any platforms that you guys use to monitor networks or to monitor where funds are flowing or to monitor kind of what's coming up next?
Yeah, absolutely. Would love to share a little alpha here with your audience. So I actually just tweeted about this, I think a few days ago, earlier this week. There's a number that are top of mind right now. I think historically, some of the more retail facing, the first tools that you'll really see and get a lot of value out are like Zapper, which is a portfolio management tool. You can plug in all your wallets and see all the different positions you have, and even access additional yield opportunities on those positions. So you go to pool or farm, and you'll see based on the tokens you have, what's eligible to stake at what APY, and kind of take that next step into DeFi and to actually earning yield on your assets and maximizing yield you're earning. DeFi Llama is a newer one that has kind of replaced some of the old DeFi indexes that were slow to adopt other chains and DeFi outside of Ethereum. So DeFi Llama is great for measuring TVL on different chains and different protocols, seeing where all the money is really moving around the multi-chain ecosystem. For NFTs, a fun one is Rarity Tools. So it's rarity.tools. We just bought a Bored Ape actually in the fund, recently over the last month. And we part of that analysis was to go on Rarity Tools and say, hey, what is the best price on the most rare Bored Ape that we can find? And that was essentially the bulk of the fundamental analysis that we did in actually selecting the Bored Ape in that collection among the other NFT drops that are out there, CryptoPunks, et cetera. So Rarity Tools is really cool for analyzing NFTs. If you're more of a power user and you really want to follow what smart money is doing and where they're investing, what they're selling, what NFT projects they're buying, Nansen is always, it's a little pricey to use, but is a really powerful tool that I think you'll see the vast majority, if not all major funds in the space have a subscription there. Token Terminal is another great one for looking at fees by protocol. So you can do things like look at the like price sales ratios, et cetera, if you want to do some analysis back into maybe like a discounted cash flow based on revenue and future projections of revenue by protocol, see what's overvalued from a revenue perspective. So maybe just to go into a little color there, revenues primarily generated by protocols in terms of fees that are charged on transactions. So that can be, if it's a DEX, that can be a fee on the volume that you're trading. If it's a money market, there can be, or like a yield aggregator, there can be a withdrawal fee or an entry fee or like a performance fee. So it's looking at the fees that are being generated by the protocols across the space, comparing them to their market caps, and kind of visualizing what's under and overvalued. Doing analytics for sort of more of kind of the computer science guys out there that actually want to ingest raw data and make sense of it. There's a lot of kind of dashboards there where you can visualize trends, but that's essentially like the SQL entry point for blockchain for the SQL kind of power users out there. Great resource. EJ, what am I missing here? I guess on the governance side, Tally is a really great governance tool. So you can actually, it's just a better UI for voting on governance proposals, essentially. EJ, anything else on your radar that you're using frequently?
Dove Metrics, I don't think you mentioned that one, is a cool resource, which just kind of shows recent fundraise activity, kind of like a more DeFi native Crunchbase maybe, shows kind of who's on the cap table of different projects, when rounds close, what was raised, which investors were involved, just helpful to keep a pulse on who's attracting interest and which sorts of investors they're bringing on board.
Yeah, Masari is my favorite, like kind of price tracker tool now. You can set up your own watch lists. They have, if you actually go through with the more expensive subscription, you have access to all sorts of insight and research. But the basic version is a great dashboard to throw on your Chromecast to your TV in the office if you want to have those, the kind of like your standard stock trading kind of feel in the office.
And then I guess one last one maybe to mention, Dex Guru, which is an aggregator of AMM data, as well as kind of a traditional, what looks like a traditional order book interface to actually interact with different DEXs. So relative to the experience of going on kind of a Uniswap or SushiSwap and just trading one asset for one asset, and it's very simple, but you don't have a lot of kind of color around what you're doing. Dex Guru aggregates activity across different centralized exchanges and provides a more kind of comfortable and traditional feel to make those trades and buy and sell with orders being routed through the DEXs themselves.
No, that's great. We have so many customers that are always asking, what's new, what's next? How do I figure out what's next? And I think that the key in crypto is to use some of these tools and figure that out for yourself. Because I think by the time it hits a newsletter or a YouTube or something like that, it's like a lot of that alpha has kind of already been consumed. I guess one other question as far as like tooling, a lot of that is more like on the alpha generation side, which is great. But we have a lot of customers that are always looking at, regulatory compliance, accounting and things like that. Like, are there any tools that you guys are using, whether it's like for custody or for security or things like that, that you think are important for, obviously once you 10x or 100x something, that's great. What are you doing to make sure that, those assets stay safe? Are you using like a Fireblocks or, or other BitGo or something like that, or, just Ledger wallets or MetaMask or Rainbow wallets or stuff like that. But I guess more of like the core tooling or day-to-day, are there any things that come to mind?
Yeah, just for, I guess to actually identify a token, CoinGecko is our favorite, pretty comprehensive version of CoinMarketCap there, that less, not directly owned by Binance. So, and then on the tax side, can't really think of any providers on the tax side. ZenLedger, that's right. Very, very powerful software. No need to plug, your users are already fully aware there. On the day-to-day, yeah. So as far as custody, there's a couple solutions that are actually coming to market now that actually enable you to access DeFi. So today, like if you're holding funds on a Coinbase, you have very limited options to generate yield on those positions. They have like a compound integration, but they're still working on bringing those tools to market. Crypto.com has a few kind of in-house where they're actually paying the yield directly. But if you're looking for a custodian that actually can allow you connectivity to Web3 and DeFi protocols directly, Copper Custody is a good option. They have a fork of MetaMask called Copper Connect that actually, assuming that they support the asset that you're trying to use, for example, Sushi, or depositing ETH on Aave, you can do that directly within Copper Custody and use their kind of 3-shard private key security infrastructure to transact and hold funds there. So that's a powerful tool on the custody side. We mentioned Zapper for kind of monitoring your portfolio holdings and getting into additional yield generation opportunities. On the regulation compliance side, we're big fans of the big publications like the Defiant, like CoinDesk, all the newsletters, Bankless, et cetera, that those guys tend to have big names in the space that are actually lobbying DC and pushing regulation in the right direction. They tend to have those guys on directly to talk through their thoughts. Kind of unfortunate. We're seeing, I guess, on some commentary, we're seeing Chairman Gensler kind of taking a position in the space and looking to do exactly what he said he wouldn't do, in our opinion, which is kind of that overreaching regulation and kind of broadly classifying many things as securities or kind of like litigating first with Coinbase rather than working on a proactive solution to advising the industry. But yeah, I mean, I think staying on top of the crypto native newsletters there's a lot of good coverage.
Yeah, from a retail perspective, I think that's really the way to go. Obviously, at the fund level, we have service providers from fund administrator to tax and audit to legal counsel that helps us with basically all of the compliance functions and navigating regulatory hurdles. So Candidly, I think from a retail user perspective, that is probably something of a gap in the space today. But at the same time, the risk factors to a retail consumer probably aren't as pronounced as they are for a fund or some other institutional player. I think the regulatory battle remains to be seen how that plays out, but I have a hard time envisioning a future where the SEC is coming after consumers that invested in something that is later deemed a security or something along those lines. So just to kind of dispel the FUD a little bit there, so no one's shaking in their shoes too much.
Yeah, I think that's definitely a big concern that I think any fund consumer, operator in the space is always kind of keeping their eyes out for. I mean, one thing that we saw even this week that has a potential impact on our consumers is potential language around wash sale trading rules within crypto. And a lot of value that you can provide within crypto right now is that, crypto assets are largely known as commodities and not securities. So the ability to sell a position that's at a loss and then buy back that same position on the same day, have the same type of position, but then lock in that loss. It's like a huge benefit for funds and for retail. That's something that we're closely monitoring and working with, associations like Coin Center and Blockchain Association on, is to, ensure that, things like that are well thought through and potentially don't pass, so that, we can still have some value in those things. I know we're kind of closing up on, the last 15, 20 minutes over time. I think some questions that we always get from users that want to get into crypto but don't know how to get into crypto is, where do I start? I know we went through a lot of tooling, a lot of alpha generating products and things like that. If you, and I'm sure you guys get the same amount of questions from either classmates at USC or friends, family, or things like that. Do you guys kind of have a few step process? Obviously disclaimer, not financial or legal or investment advice, but let's say a friend comes to you and says, I have $1,000. Where do I get started? Are you suggesting that they get into, go through a centralized provider like a Coinbase, FTX, et cetera? Are you suggesting that they try out some yield farming or, just getting to Uniswap or Compound? Are you suggesting they go right into NFTs? What does that kind of onboarding look like in your opinion for maybe a user that's kind of has one toe in and wants to dive into crypto? Where do they get started?
I think you probably get, you kind of hear the same answer, that it becomes a little bit cliched, but it really is the type of space where you learn best by doing. Twitter is definitely the best place to get started, just to follow the chatter, follow the kind of memes and the sentiment, and get an understanding of how this kind of market operates at a human level. But to really have the light bulb moment and to understand the power of DeFi and why so many people are so passionate about it and see such a bright future for it, I really think the only way to do it is to actually interact with some of these protocols. I think some of the tools that Keegan laid out before are great resources to understand which of those protocols are more battle tested and are more safe, especially for newer users who are less comfortable navigating self-custody and MetaMask and everything along those lines. But the $1,000 mark is maybe a little bit of a hurdle, only because of gas costs right now and over the past few months. Hopefully, the proliferation of L2s that we're seeing right now, with starting with kind of Matic, Polygon, and now Arbitrum, Optimism coming online. A number of other scaling solutions will be rolling out in the next few months, so transactions will be cheaper. But that aside, yeah, I mean, it's you go into Coinbase, you buy some ETH, you send it to your wallet, and then you lend a little bit of it on Compound, and you borrow some stablecoin against that, and you deposit that stablecoin into Curve, and kind of understand it every step of the way, what's actually going on in these protocols, how these yield numbers that you're seeing that have flattened a little bit for the more traditional blue chip DeFi protocols, but still are, magnitudes ahead of what you could realize in traditional finance for similar type of risk appetite. I think that's really how people kind of have that 0 to 1 moment where they really start to grasp it and understand the value that's had there. And it's pretty fun, honestly. Getting started in those early days is, you just learn so much so fast, and one step naturally leads you to the next, right? So not to give a super cliche answer, but I really think that the getting your hands dirty and trying, with a disclaimer, with an amount of money you're comfortable losing if you make a mistake, that's really the best way to learn.
Yeah, I'll just I can provide probably a shorter answer here. So our guy DeFi Dad, who works at the fund, has some excellent tutorials on YouTube. If you Google just DeFi Dad or DeFi tutorials with DeFi Dad, you'll find his channel. He walks you through all, in YouTube videos all the way through what is DeFi, the things you can read on the Defiant or on CoinGecko or on any of those other kind of publications. You can watch his videos and he'll actually walk you through how to do all these things DJ's talking about. So what does it look like to use, set up a MetaMask and use deposit ETH into a money market and borrow against it and then try to generate yield on the borrowed assets? What do all those processes look like? I think he has a tutorial on almost every blue chip DeFi protocol in existence. And if he doesn't, and there's one out there that you're really interested in using, feel free to get in contact with him directly or with us at 4RC, and we'll see what we can do in terms of getting a tutorial out there. That's, education and community engagement is one of the things that we pride ourselves on as a fund. We consider ourselves extremely crypto native. We were using DeFi Dad tutorials before we hired him, and now he's part of our team. So yeah, that's a great resource. I've also written some articles personally called The DeFi Opportunity by me, Keegan Selby. So you can look those up. It's a 101 on what DeFi is, what are some of the opportunities out there and how to capitalize on them. So I think that's, you can never fail with DeFi Dad YouTube.
Yeah, no, I appreciate that. At least for me, it's always been a weird mix of the two, and the mix is like the distribution between that mix is varied between like year over year. I think back in like 15, 16, 17, it was more like high level, look at this, read that, follow this person, look at that newsletter, etc. And then you get to that kind of like causation point, or like show for point where like you hear enough about it and you think you know it, but then until you start actually like going into EJ's side, it's like until you start actually using these protocols, using these products, using these services, like it still seems like super theoretical. And I think finding that right balance and mix between having guides, having support, following the right people, looking at the right things, but then also getting your hands dirty and really diving into these protocols, diving into NFTs, diving into how they work and how they operate. It's a super like amazing thing. It's probably the best way and the fastest way that you can learn. I know we touched on one thing as far as like gas fees, and I guess that's maybe a good place to have like one last kind of final discussion before we jump off is what's next. Like we always get that question, and for a while there it was like, oh well, DeFi is next, and then for a while there it was like, oh well, NFTs are next, and then for a while there it was like, oh DAOs are next. And I think like we highlight what's next, but we kind of overlook the building blocks of each thing allows the next things that come next. But I think one thing that we see a lot of times with our users are, they're hearing about Ethereum, they're getting involved, they're looking at gas fees, and they're just saying, I'm priced out of this. So they're looking at layer 2s, they're looking at other blockchains like Solana or AVAX or things like that. So, in your opinion, over the next like 12 to 18 months, do we see a ton of the layer 2 activity? Do we see new blockchains continue to rise? Obviously, I'm sure we all saw like the news with Solana yesterday and kind of the downtime. So we still see that these things are being battle tested and tried out in real time. And we're gonna have some bumps and bruises along the way. But over the next like 12, 18 months, like what are the things that, Chris Dixon has this like quote that I always love. It's like the smartest people, what they're doing on the weekends is what, the average person is gonna be doing, in their week to week moving forward. So like, what are those things that, maybe on the fringe of super crypto activity right now that we think will kind of start being mainstream moving forward?
Yeah, I think we're going to see layer 2s be massively successful, and we're going to onboard a lot of that volume, a lot of those use cases, a lot of those users that have traditionally been prohibited from engaging based on the expenses of gas fees. So L2s are here. We've been waiting forever, and now they're here. So there's definitely some exciting action happening on L1s elsewhere. A lot of kind of copy and pasting of the same DeFi Legos and money or DeFi money Legos that have existed on Ethereum for quite some time and are now enhanced with higher throughput and cheaper transaction fees on Avalanche and Solana and Terra, and that's awesome. I think what we're most excited for is all the net new stuff that's coming. So the metaverse applications, the gaming applications, the things that make this fun, and entertainment using NFTs to represent your digital identity and being whoever you are, whoever you want to be in the metaverse, engaging with whoever you want to, and buying and selling and transacting, permissionlessly. So I think the metaverse, if I had to sum it up, is up next. We're already seeing like even hardware like Ray-Bans is adding cameras and speak in microphones to their glasses, and there's expensive models that are in prototype with screens and everything. So you can, if there's a digital art installation on Venice Beach that you can only see on your iPhone or on your kind of Google glasses or whatever, maybe there's an NFT that gets you the ability to actually view that, or that gets you into a concert. So all that intersection of physical and virtual and augmented reality is up next, in my opinion. EJ, what do you think?
Yeah, I'd agree. And I think that kind of more broadly, we'll just continue to see the obfuscation of some of the technical complexities and the kind of crypto native DeFi user experience that continues to become a more vast learning curve that becomes like day after day more difficult to climb for someone that's coming in new. I expect that 12, 18 months, kind of subjective to call it that timeline, but in about that time, maybe a little bit longer, we're really going to start to see applications, whether they're administered by traditional fintech companies or crypto native companies, that you don't really even know that you're interacting with DeFi or with NFTs. You just know that you're earning more money than you earned with your deposit than you did in your Chase savings account. You just know that this collectible thing that you have is digitally native. You can transact it almost seamlessly. You can track the provenance and ownership. So all of these sort of scary terms that we float around here, day to day, that are very, understood by us now, but sound like a foreign language to someone that's coming into this space new, will kind of start to be sunsetted, I imagine, and we'll get to a place where interacting with crypto and with all the primitives that we've talked about today just sort of becomes commonplace and very simple for the average user to come in net new.
Yeah, no, I always love to kind of get a temperature check on, what certain people are seeing as kind of what's coming up on the horizon. I have one last question for you, and this is an absolute ripoff of a question from one of my favorite podcasts, which is Invest Like the Best by Patrick O'Shaughnessy. He typically ends by asking people what is like the nicest thing or the kindest thing that someone's ever done for you. And I think it's like a cool way to get a human approach to crypto. And I think, just like you're ripping on, I think there's a lot of high level nomenclature and verbiage that we use that may not be easily digestible, but I think everyone is always looking for, small human touches. So I guess last question for you guys, and then, we can, tie everything together with letting people know where they can find you and get in touch with you. But if you have to think about whether personally and professionally, like the kindest thing something's ever done for you, what would that be?
Yeah, for me, it's mentorship. I think, if you teach someone how to fish, that's ultimately the best gift that you can give them. There's been a number of people in my life that have done that for me. Guys that are well known in the space, that probably respect their anonymity here, but it goes without saying that, like we mentioned before, if you have questions about the materials or anything we put out or tutorials or anything, feel free to get engaged. This is community first, and that's the most important moat in not just projects, but I think in funds too. So yeah, mentorship is something that has been instrumental in my success and something that I'm more than willing to offer to anybody who's looking for it.
Yeah, that's quite a question, Dan. I like that one. I think thinking about sort of our ascent from where we've come from through launching 4C, I would just say, really kind of the support structure provided by family, friends, network. A lot of risk involved in all of this, and there's a lot of times where people think you're absolutely crazy talking about this like scam internet money that everyone's very skeptical of. And at the same time, when you have family and friends around you that are willing to support that vision, let you see it through, kind of stand there beside you in the moments where things aren't going so well. That really allows, it's kind of like what allows someone that's an entrepreneur or someone that's a risk taker to be able to do those things with confidence. And I can definitely say that, wouldn't have been able to take the leap of faith to leave the old life and pursue crypto full time in the first place if it weren't for those structures that existed in my life. So definitely grateful for that.
Yeah, I feel that. I remember the last time that I had a conversation with my mom about leaving traditional finance for crypto. Made the jump in 2015 to leave like a well-known financial institution and jump full-time into crypto. And it was a hard conversation to have, but that support and, the guidance and structure and flexibility to have someone kind of in your corner and behind you while you're jumping in full-time is huge. And I think that ties into, to Keegan's answer of once you're in, it's helpful to have people in the industry and within crypto that are super helpful. And I think that's something that we always try to do. One of the things with this Crypto Innovator Series was try to get more, actual conversations with people doing things in crypto to give more value to our customers. And I think that's one of the magical things about crypto is you have the smartest people, whether they're individuals, running a team, running a fund that are more than willing and welcome to connect with you, hop on a call with you, chat with you on DMs, jump into a Discord with you and really helpful. And I think that's such a huge value add that our industry has that a lot of industries are kind of boxed out. Like it's a very corporate ladder structure. And unless you know who's who, like it's hard to get in touch, but it's very easy to jump into Twitter and try to jump into that conversation and collaborate with people. But I know we're coming up on time, so I appreciate you guys jumping on. It was really cool to get kind of the background, the story of the fund, what you guys are up to now, provide some alpha to some of our customers around tooling and, what's coming next on DeFi and NFTs and metaverse and gaming and things like that. And I guess just to close out, very thankful you guys came on, and maybe if we could, just let people know how they can get in touch with you or the team or the fund, and then we can close out right after.
Yeah, guys, find us on Twitter. I'm at Keegan_Selby, and the fund is at 4RC, and then it's 4R Capital. So, yep. EJ, what about you?
And I'm on Twitter as well at EJ __ actually Rogers, and our website is linked from the Twitter page, but also it's just fourthrevolution.capital to find it directly.
DMs are open, guys.
Love to hear that. Well, I appreciate you guys coming on. It was a pleasure to connect with you guys and give our audience, some other data points to look at, and glad that we were able to let them know where to find you. And, for everyone else that's listening or will be watching this recording, stay tuned. We'll have Laura Shin coming on for episode 4 and getting into her background and all the amazing work that she's doing within crypto. And we'll still have, episode 5, 6, 7, 8, 9, 10 throughout the end of the year. So I appreciate everyone's time. And thank you for joining us for episode 3 of the Crypto Innovator Series.